Exercise 14. On October 1st, Keisha King organized Real Answers, a new consulting firm. On October 31st, the company's records show the following items and amounts. Use this information to prepare an October income statement for the business. An income statement is a report that chronicles the change in equity, net assets, as a result of the operation of the business. The format for an income statement lists the company name, the report title, the income statement, and the time period for which income is being reported, in this case for the month ended October 31st. The income statement lists revenues, expenses, in the calculation of net income. When total revenues exceed total expenses, it's called net income. If revenues fall short of expenses, it's referred to as a net loss. So let's go through the list of accounts and decide where each item belongs in the accounting equation. Cash, accounts receivable, office supplies, land, and office equipment are all assets. Accounts payable is a liability. Owner investments are a subset of equity, but not an item that's reported on the income statement, because the investment represents a transaction with the owner personally. Cash withdrawals are also part of equity, but again, not an item that would be reported on the income statement, as it represents a transaction with the owner personally. Consulting fees earned is part of equity. Specifically, it's a revenue account. Revenues are business activities that result in inflows of net assets. We report consulting fees earned on the income statement. Rent expense, salaries expense, telephone expense, and miscellaneous expense are all expense accounts. Expenses are business activities that result in outflows of net assets. Expenses are reported on the income statement. And when we list the expenses, we list them in descending order, listing the largest expense first. So we would include salaries expense, rent expense, telephone expense, and miscellaneous expense. Total expenses, $11,200. So this company during the month of October engaged in business activities that resulted in $17,000 worth of assets flowing into the business, and concurrently $11,200 worth of assets flowing out of the business, resulting in an increase in assets, our definition of net income, of $5,800 as a result of the operation of the business. Net income, these new assets, belong to the owner, which is why this answer will be transferred to the statement of owner's equity.